Thank you for coming on into the live and sharing your essence with me in this eternal moment in which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So 12 hours later, just about from our analysis, we are getting that little bit of a push to the upside, to that potential pool of shorts. So what is that going to be? Let's go look at the liquidity. Will people lock that liquidity into the charts to get burned to a crisp by the market maker for not using the stop loss? And we get to see what those crispy characters are, so let's do it now. In the last 24 hours, 22 million destroyed on ETH, 18 million in shorts, 3 million, 3.9 in longs. For BTC, 17 million in shorts squeezed, and a bunch of alts as well. And in the last hour or so, you had 689k 40 short squeezed, alongside 200k on ETH longs and shorts, a 334 long short for BTC, and 10 million in shorts in the last 4 hours.
Fatality.
And that's what happens when you don't use a stop loss. So it looks like there is some more up here in the 52838 range, 197 million in this 3-day time frame. If we expand this vision to the upside, we can see that there is some more, 3 billion at 52965 on the 6-month time frame. If we come back to that, the shorts just keep shorting, thinking they got the top, even though it is like standing in front of a freight train on that idea. It is reasonable to think that at some point we would get a pullback, but 53k does have 5.6 billion up there to grab. Meanwhile, you have to go all the way down to 46k to get that 6 billion, so they could just go a little bit higher, squeezing some of these shorts to the upside. So let's go ahead and take a look at what's going on and a different analytic of how to look at the price. So you have previously coming up this range, now coming down possibly into that 51.1 to grab some of this $446 million liquidity, and coming lower. There's more down below, but still some trades open. We will see. So let's go ahead into the charts. It looks like this, we pull this Fibonacci on down to here, then you can see that we are at the 786. Do we get a bit of a rejection here? One thing to keep note of is the open interest is dropping as we make higher highs, and the shorts are falling off and the long interest is falling off. So it could be time for a pullback. You're getting a bunch of squeezed shorts each time, shorts, not so many longs, so the longs could be on the chopping block at some point in the future. Let's go ahead and log into a toss while we wait. I think I did hit the button, so let's go ahead and turn on the momentum. Link in the description for more. momentummaster.info. You can scroll down to features, toggle everything at your leisure using the interface here, and see what it looks like in its full glory, or read about each component, the trend cloud, the baselines, stochastic array with 7 time frames of information, and more dynamic alerts to your phone. And that is that. Let's go ahead and take a look as we throw it on here. Okay. So on the 12-hour time frame, we do have this cross down event of the baselines, which are your first sign of reversal. Does that mean we get a suppression of the price to see the 12-hour retrace off the 786 here? Watching to see if this point of control holds of this at 51.767. This is false move Monday, February 19th. Do we hold this range and go range bound, or are we going to break out here? There's no guarantees. We need to break out right here, right now. They could induce some more shorts. And if we come to the daily time frame, we're starting to possibly fade off of the second baseline. I call it the fat boy because it's thicker and slower than the thin boy over here. So we've have both of the baselines on the daily time frame been above price action, suggesting a slight pullback. We had this 2 o'clock rise up on the daily time frame. We never failed it. until about now. So if we start to see this Williams cross and the money flow above the RSI here start to come down to the RSI, then we could be getting a little bit of a money flow disparity decrease of the daily time frame. Even the daily time frame pulling back slightly to the super trend at 7.8% away at 47,967 is not a strange thing to think. We came all the way up from February, getting a little bit of a pull back even to this range where the wick is here at 47 or 48k is still bullish. All right, so the 3-day close indecision doji, we went over it yesterday. Let's go over the weekly and see how the weekly holds up in court. So the weekly we were looking at was, does it close above this level here, the Monday 30th of August 2021 and September 6th 2021's open. This was a level where we dropped, and we did put in a level above that. So with the interest to possibly continue higher into some of this liquidity over here on the left in this 55k range, you don't really have much resistance beyond this point. So if you gravitate up into these regions, you could be on a tear continuation idea. The weekly time frame previously put in a cross down event into the cross up with that week of bullishness. So are we going to flip these into support and continue higher? Getting a bit of a pullback on the lower time frame into some of this candle to test the orders to see if the bullishness can continue would make sense to go get some lower discounted prices. Coming to the daily once again. So the daily time frame, we just went over that. Coming to the 22, so the 22 hour, last time we were talking about how the 22 could possibly get suppressed by the Williams. One thing to note is the money flow disparity beneath the RSI here. When the money flow gets beneath the RSI, it tends to gravitate up to the RSI. There are those rare occasions where you're at the end of the road of a run where the RSI comes down to the money flow. If that's the case, it would be an acceleration to the downside with a fury to that meeting of the money flow. Here's the case we were pointing out where the money flow was beneath the RSI here on the 22 on February 7th, Monday, last 2 weeks ago. So, and then the money flowed up to the RSI, as you see, the rest is history. So this happens quite often. Money flow beneath the RSI surges up to the RSI. Okay, this is why we juxtapose the RSI and the money flow together, and they are key indicators. Indicators are just overlays and interpretations of price action. So the purist price action traders denying themselves the analysis of indicators is silly, and they need to consider all options. The synergy between price and indicators is key. You don't need to leave it on all the time. There's an eyeball to turn it all off, and then you can look at the wicks and candles too. Don't limit yourself to one way or the other. Okay, so the 12-hour time frame, stochastic coming down, money flow beneath the RSI, suggestive of a push up in general, how the money flows up to the RSI. The Williams is gassed, but when you're on a run, it could do double and triple tops at the top there. But eventually one of these alarms plays out and you meet yourself to the downside. The 12-hour cross down event is one of those concerning things we're looking at. One of the other times that occurred was here, December 9th, and then the baselines crossed and boom, we dumped to the downside, got suppressed for a little bit until the 18th of December. Same here, cross down event, boom, we dumped all the way down to 38.8. So, is this a fake out? We've had a fake out on this way up only here on Sunday, February 4th, and then we started to burst out on that Wednesday. Okay. Coming to the 6-hour time frame. 6-hour time frame also holding the baselines here. Money flow RSI even Steven levels. The 6-hour rise up is not as accelerated, lacking volume. You see here the volume is not colored, so the colors are bled from the candles, lacking in volume. So this is just a basic stop hunt for the shorts right now, punishing the shorts, scaring them out. And you're getting a 4-hour cross here on the baselines as the price maintains beneath it. Do you see some acceleration up to that level? We were talking about possibly coming up into that 52.9-ish region. Do we continue on to that merry path of liquidity up in there, that region? The high leverage folks start to taper at 52.8. You still have a large amount down below at 51.3, so we could just bleed out into those longs now that we took out some of the shorts. Once again, it is False Move Monday. You're down a liquidity pool. You need to be abreast, keep abreast to the news. So as you see, there's some folders, yellow folders today. Tuesday has some CPI data for Canada coming in before the New York Open. And then you have some FOMC on Wednesday. So watch out for the FOMC minutes. And yeah, on Wednesday. And then you also have some others on the Thursday, basically the end of Wednesday. And PMI for Euro and German in Canadian currency, and then PMI for. So a lot of news on Thursday. Thursday is going to be an interesting day. So keeping yourself abreast to the news. This is once again down a pool because Monday is a holiday here in America. So we could be seeing a pullback to see some of that setup for the week. Let's go into the hourly time frame. Hourly time frame is meandering around ambiguously. The thing we were looking at yesterday on the New York session was this cloud kiss and this curvature. It wasn't thinning just yet, so we were not really convinced of the idea, but we did say you could come to the cloud and bounce off it. Earlier in the morning, my time, 5 a.m., it started to shift a little bit, and boom, we got that little bit of a push to the upside. Basically played out, so we're gonna delete all this and think fresh from where we're at right now. So the 786 at 52.341 is holding. You technically have this 3 hits to the high idea, the 3 drives pattern that you could be maintaining here on a larger time frame. Are we going to see a potential push down at this point? Let's go ahead and go into the lower time frame and then switch sectors into the dollar and see how the dollar's holding up. 15-minute resetting here alongside the hourly. Do we get a little bit of a push down? Asia is known for taking it to the downside, so I wouldn't, unless we're breaking out like we did on that Friday. Friday on that time over here was one of those exceptions where Asia just sent it. Even then, they held it sideways until London took it up. But this Friday was that Friday, the 9th of February, they sent it on an Asian session, but most of the time Asia does not get the permission to, or the power to push it higher. Okay, so as of this moment, we could be seeing a little bit of a rejection. We pulled into some of the shorts, and now we could be coming back to the longs here. Let's go ahead and shift sectors to the Dixie and see where the Dixie wants to head. One thing we were looking at was the 12-hour cross down event here on the baselines for Momentum Master. Was this going to see some acceleration down to the super trend here at 103.822 or 821? or not. This would bring us down to this range wick high that we could possibly flip to support and hold the super trend to go higher. You do have some gaps down here and down in here if we are going to make those draws. We rejected off the 50% mark of this drop down here range. If we're going to continue higher in the FOMC stuff during the midweek, we could be pulling back for that idea in preparation for the FOMC minutes. You have some value area highs and basically some point of controls here. These purple lines are these point of controls on my chart. Basically a lot of value area highs around here. So this 103.533 is some defensible point. If you're going to flip this into support, it would be at these levels too. And yeah, that is the dollar. So if we come to a currently dropping, which means the NQ is still holding some support on these point of control levels. Let's go ahead and look at how the Asian session is setting it up. Still rejected off of this cloud on the hourly for a sell-off, leading into the weekly candle close. Still maintaining the bearish sentiment here. Do we go lower into some of these key levels below? 17,675 is the 236 level we maintained over here on Wednesday before sending it up. Do we come back to that level? There's a volume area point of control at 531, which we didn't come into. We came slightly into that range at 546. Do we come down into that and test that for some support? Alright, so Dixie is pulling back, and basically you're down a pool of liquidity. Monday is going to be interesting because it's just going to likely be low liquidity and wick whacking both sides. Let's go see if you guys have any questions or comments in the chat. What's up, Clue? CNC, how's it going? So we came up to the 786 on BTC, 3 drives pattern. If you look at this, going to 3 hits to the high. Are we going to break down at this point? Once again, the open interest is dropping as you make a higher high, and long interest and short interest. Shorts just get pounded, so they could make a pullback into the longs. Areas down here, 51,100 is where all the high leverage people are, 446 million. And going to the 12-hour. Overall though, you have that thick band up there at 52,838, so watch out for that stab up. Eventually it does reward one side and leaves it alone. You have those protected positions. What do I mean by protected? Well, look at here. They had 7.57 billion. They could have come back to 8 billion here on this wick down here at 37. They did not, and then they continued higher. So there are zones which are the market makers or the exchanges that they just don't take out of their position, and then those guys get to remain in for it until they start establishing a position to the other side, and then they don't always clear it 100%. Once again, down here in October 2023, you had 7 billion down here. It didn't come to it, and then it just kept going. These protected positions, we watched it when we were looking at the rise up in 2022, December, we are seeing protected positions down at like 15K that they never swept. So they don't always sweep everything. It's not as clean cut as that, sweeping it all off the table and then going. They set up a position on the other side too. So do they come for this 197 million at 52,838, or start making a way down into a retrace idea based off of the lack of open interest on the longs and the shorts? Anyone got any questions? No? Anything? So once again, we'll be watching this negation of a short idea here at these Fibonacci levels. If it goes back above here, then we're coming up into that liquidity on the higher time frame. You have some all the way to 53K on the weekly, so you could be coming all the way up to 53K up in here to that 706 level on the fibs. If you start putting in higher highs, then you are essentially still bullish. Okay. So, expecting to see some retrace for the Dixie, possibly sweeping this range, setting up for the FOMC, and then possibly react off of that. If that's not good enough, then you have some areas down here that they could find for support for the time being. Why do I think that way? Well, if you go to the 12-hour time frame, here we're still seeing this cross down event with no abating effect just yet. This wick to the upside and slam to the downside suggests that they're on their merry way down to this level, at least to the super trend, and seeing this Williams suppression idea of this Williams opening up on the 12 for Dixie. The correlation of the Dixie and NQ is not one-to-one like it used to be. Same with the dollar with Bitcoin during the FTX fiasco. They kind of decorrelated one-to-one. It used to be much more sensitive to the S&P and dollar, but does not act one-to-one these days. Sometimes they pump at the same time. Alright, so yeah, seeing a possible retrace back down to here just in the interim for that setup into the news on Wednesday and Thursday. So you got not much going on Monday. Tuesday has the news, some news, medium impact, and then Wednesday has the real news. We're going to go ahead and look at some footprint charts right now. This is not a time-based chart, but a trade-based chart. So based off of 2,000 Bitcoin traded, it will move a candle in a direction. So you can see more momentum in the footprints here. So as we swept up to here, for example, to 52.5, you had 996 Bitcoin bought at the tippity top. That was most likely a short getting popped and having to market buy at the top as their account was closed. So it basically closed out 53 Bitcoin and 96 Bitcoin at the top, and then just started to pivot back, and that's what you would call a failed auction. So they bought at that and nobody wanted to buy higher than that, so they sold off aggressively. You can look in here too, there's this circle around that level because it's highlighting large amount of volume. You had a delta spike here with the green, and yeah, this is what I'm looking at on another chart off stream most times, looking at the delta and the aggression of buyers and sellers inside the candles. Bitcoin has less volume than NASDAQ, so you have a lot of thin print, 0, 0, 0, not so much on either side. You have much more aggression and stuff happening, contracts inside of NQ, particularly ES. And then as we came down to here at 52.2, 52.2 is here, you had this aggressive selling. So you had 24 Bitcoin sold into the bottom. And then it started to bounce up, 51 bought. Then immediately they offset that selling amount with that 51 buyer. So they said, okay, we can take you lower now. 41 sold at the bottom. That's a long getting stopped out at 52.1. Then they came up and they came on down to here. 49 sold at 52.1. And then came back getting a lot more sellers and buyers. And then this is where we are currently. On the session, you have 180 Bitcoin negative delta, as in more sellers, 180 more sellers than buyers for the session. And that's what you can look at. Starting to taper here, not so much volume or follow through on this level. And if you're interested in that and you're in the Momentum Master Discord, you can shoot me an email. I can hook you up with the template after you check out the download from Atas, link in the description. 14-day free trial. Alright guys, so we're seeing this curvature from yesterday on the hourly. Does it cascade? Do you come back and get a little bit of a bounce here, or are you going to pull back into that 50,700 liquidity again? You have about 187 million on the weekly there. Looking at the daily, yeah, you got this 52.2, basically 50,200, sorry, 50,200, 51.2. So 51.2 would take you down to here, halfway point, this wick. We will see. So I expect it to be slow on Monday because they're down the New York pool. So we'll see. But we could go sideways until Tuesday, New York. And it would not be surprising. So that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.